So welcome back. We're going to continue in chapter 1 with learning objective 2. We're going to start classifying costs that we use in managerial accounting. Now, we talked about in financial accounting different types of companies. If you took financial accounting at the Northwest campus of TCC, then in the textbook we used for the first 4 chapters, we were what's called a service company, meaning we just sold services. We sold our expertise, we sold our time, we sold our knowledge, but we didn't sell an actual physical good. So if you took your financial accounting class from us, you remember that we were Smart Touch Learning. We were providing some e-learning services. We were providing online training services. Now, starting in chapter 5, we became a merchandiser. A merchandiser sells a product, but it's a product that they have purchased. They're not making the project, so the merchandiser is just the middleman. So we started at Smart Touch Learning selling tablet computers. So we purchased the tablet computers and we turned around and resold them. In this course, for much of the course, we're going to be a manufacturer, which means we're not buying the product we're selling, we're actually making the product we sell. So we'll have to buy the resources, we'll have to buy the raw materials, we'll have to pay for the labor, we'll have to pay for the overhead, all of the things that go into converting those raw materials into the finished goods, and therefore then we will turn it into a product that we'll sell. So as a manufacturing company, we're going to have actually 3 inventory accounts. We have raw materials, which are exactly what they sound like. They're the materials that we're going to use to make our products. So we're going to start as Smart Touch Learning. We'll start making the tablet computers. So we'll buy all the little bitty components, and then we'll put them together to make our product. So once we've started working on the product, we'll have what's called work in process. So the best way I can explain this to visualize is imagine there's a large factory and there's a conveyor belt. So the raw materials are the things that we've bought but we haven't started using yet. Once we've started putting the materials together, we've started making the product, then you have work in process. These are these goods that are partially completed. They're not ready to sell, but they're not just raw materials anymore. And then once we get that good finished, we will transfer it to a 3rd inventory account called finished goods inventory. And this is similar to the merchandise inventory account that we saw in financial accounting. These are the goods that are ready to sell to a customer. So all 3 of these accounts are inventory accounts. Remember, inventory accounts are assets, and assets have normal debit balances. So we'll watch the goods as they transfer out of raw materials into work in process, out of work in process into finished goods, and then once the goods sell, they'll transfer out of finished goods and into that expense account, cost of goods sold. I hope this is all starting to sound familiar. Assets, normal balances, expenses, things like that. If it has been a while since you've taken financial accounting, I do encourage you to go back and kind of review that information, especially if you still have your old textbooks or some old notes. If not, you can go into my accounting lab and read the ebook in there. But go back through that first half and kind of, especially the first couple of chapters where we talk about account types and normal balances and journal entries and T accounts. We are going to be doing a lot of those sorts of things as we go through, so you'll want to make sure you reviewed that. Now, once we have our accounts, but we're going to classify our cost as what we call direct or indirect. So a direct cost is a cost that can be easily and conveniently traced to your finished product, to your cost object. The cost object is the thing that you're trying to measure. So if this is a product that, let's say that we are making a car, okay? And so we get to the car is our cost object. We get to the finished product and we can look at this car and say, there are 4 tires on this. I can easily trace that cost of those materials. I bought the tires. I know that there are 4 of them on this car. I can trace that cost. That's easy to do. That's a direct material. But there's some costs that we can't easily and conveniently trace, that we know that they were used, but we don't know exactly how much were used, so we have to estimate it. So as you're making a car, as you're putting a car together, I imagine, I've never actually put a car together, but I imagine that you're going to use a lot of grease. We have lots of things that we need to screw on. We're going to grease them. Nobody's measuring how much grease we're using. We're just using enough. We're using enough that we can get everything greased and all the axles are running and pistons are pumping and whatever it is that pistons do. Um, so we've just used enough. We don't actually know how much we've used. We're not measuring it. We're just going to estimate at the end. We're going to say, I think I used this much. Okay, and there are different ways that we estimate it, and we'll talk about that later. So if it's something that I can't measure easily and conveniently, then it's what we call an indirect cost, okay? So an indirect cost is one of those things that we can't measure. So for materials, if I can easily track exactly how much materials I'm using, then that's a direct materials cost. Like the tires, like the windows. I can look at it and say, well, there's 4 windows in this car. I can track that. If it's something that I can't easily track, like the grease used, then that's an indirect material. Labor can be direct or indirect. So if I can easily and conveniently measure how much time you spend working on this kind of hands-on time, then that's direct labor. If we're talking about support labor, people who really aren't getting their hands dirty is kind of the rule of thumb. So you have the supervisor of the factory, you have maybe the administrative assistant, you might have the janitorial services. These are all kind of support services. They're not actually building the product, but they're important components. We can't really measure directly how much time they spent of their job supporting the production of this particular product, then they're what we call indirect labor. Now, keep in mind the difference between price and a cost. So usually when we use the term price, we're referring to a sales price. Cost is how much something we cost us, the company, how much we paid for it. Now, a cost and expense are not exactly the same thing. Sometimes you'll hear people use those interchangeably, but they're not. A cost can be an expense, but sometimes we pay for things before they become an expense. Like when we buy supplies, those are an asset until we use them up. So they're not an expense, even though they are a cost that we have incurred. So I realize that's a little bit confusing. Don't let that trip you up. I just wanted to point that out. So in a manufacturing organization, we're going to have 3 costs. We'll have direct materials, that's the raw materials that we could conveniently and easily trace to the cost object. We'll have direct labor, that's the hands-on labor, the employees who are actually doing the work of building and developing the product. And then we have this category called manufacturing overhead. You may also hear this called factory overhead. So overhead is all of the other costs that we incur in order to produce the product, but that are not direct materials or direct labor. So it would include those indirect materials like the grease that we can't really measure. It would include indirect labor, which is what I tend to call that support labor. Remember, direct labor is really our hands-on labor, so indirect labor is our support labor. And then it's everything else that we have to pay in order to run our factory, in order to run our manufacturing facility. So it would be the rent on the factory, the utilities on the factory, the insurance on the factory, the property taxes on the factory, depreciation on the factory equipment, repair and maintenance for the factory equipment, all of the stuff that needs to happen in the factory so that the factory runs correctly and appropriately. So again, if it happens in the factory, it's one of three costs. It's direct materials, direct labor, or overhead. Now again, overhead is one of those terms that we oftentimes hear people use, but they usually use it incorrectly. Okay, so overhead, manufacturing overhead, factory overhead is specifically referring to those costs that we incur in the factory that is not direct materials or direct labor. So these manufacturing costs, we'll also hear them called product costs, and we'll talk about that more in a minute. These are the three costs that we have to incur in order to produce our product. And I do apologize, I don't have great handwriting anyway, but especially when I'm trying to write with a stylus on a tablet, my handwriting is even worse. So I apologize for my poor handwriting, but hopefully you can make it out. So I like this diagram because remember we're Smart Touch Learning, we're making these tablet computers, and really I'll tell you why I like the diagram because of the glue down here. If I'm making a tablet computer, which I think of as being like an iPad, do you really think they're using a bottle of Elmer's glue? I don't know, but it makes me laugh. So direct materials would be things like the processor or those materials that we buy, we can conveniently and easily measure exactly how much is being used. Our direct labor, again, is our hands-on labor. And then our indirect labor is those indirect materials, the indirect labor, such as the glue and other things that we can't easily and conveniently measure to determine how much we use to create the finished product. Now, a couple of terms that we're going to introduce here. We will come back and pick these up in the later chapters, so I just want to introduce them here. Prime cost is direct materials and direct labor. So prime cost would be direct materials plus direct labor. Conversion cost is direct labor plus overhead. So direct conversion cost is the cost of converting the raw materials into finished goods. So now we're going to go back to that discussion of product cost. Remember we said our three manufacturing costs or our product cost are direct materials, direct labor, and overhead. Now these are all inventoriable cost, which means we record them as an asset. So we know that we buy the materials, we record them as an asset. When we pay our employees, when we pay our direct labor, instead of debiting an expense account like we learned in financial accounting when we recorded payroll, we debited salary and wage expense, credited salary and wages payable. Now instead of debiting the expense account, we're going to debit an inventory account. We're going to debit an asset account. Remember, an inventory is an asset. When we incur overhead, so when we pay the rent on the factory, instead of debiting rent expense, we're going to debit an inventory. We're going to debit an asset now. When we pay the electric bill for the factory, instead of debiting utilities expense, we're going to debit an inventory account. We're going to debit an asset now. So we're going to record all of these costs as assets, and they will remain an asset until we sell the product. When we sell the product, then we will debit the expense account cost of goods sold. So most of the time when we incur these, we're going to debit the inventory account work in process. Okay, and then work in process is where we accumulate all of our product cost, and they will remain in an asset. They'll go from work in process to finished goods, and then from finished goods, once they sell, they go into the expense cost of goods sold. So this is for the three product costs, those direct materials, the direct labor, and the overhead. Now, your rule of thumb is where the cost occurs. If the cost occurs in the factory, in the plant, in the manufacturing facility, then it is a product cost. So these are all the costs in the factory. Okay. Now, any cost that the company incurs that's not in the factory, it's not associated with producing the product. It probably has to do with administrative expenses. It has to do with selling expenses. It could be taxes or interest, any of those sorts of things. Those are called period cost or non-manufacturing cost. They don't get recorded as an asset. They are just going to be recorded as an expense up front. Now, a tip is these costs are frequently called selling and administrative. So anything that's more selling and administrative in nature is a period cost. It gets expensed, whereas the product costs get recorded as an asset. So again, if we have to pay the marketer's salary, we have to pay administrative expenses. Notice this says rent on the administration building. Those are period cost. Whereas our product cost would be the direct materials, the direct labor, and all of those overhead items. Now, I really like this chart because it really illustrates the difference between product and period cost and gives us some great examples. And one of the things that I see students have a struggle with is we want to make rules. And so we'll get in our mind that, for example, depreciation is always this cost. Okay. Well, what matters is what is being depreciated. So notice when it says depreciation on manufacturing equipment, then it's a product cost as part of overhead. But if it's depreciation on office equipment, office implies an administration function, then it's a period cost. Okay. Property taxes on the office implies administration is selling. Property taxes on the factory is a product cost. It's part of overhead. Notice when we look at supervisor salary, if it is the production supervisor, production again implies factory, then that's part of a product cost, that's part of overhead. Whereas if it's the CEO, that's administration, that implies it's a product cost. Okay. And then wages for assembly line workers, that's a product cost but is direct labor. They're actually getting their hands dirty. So the supervisor of the factory is a product cost but not direct labor because they're not getting their hands dirty. Okay. So these are things that we need to think about when we look at down here. Freight on the purchase of materials. So that's shipping costs that we had to pay when we ordered our materials. That's a product cost, part of direct materials. But delivery expense, delivery implies a selling function. So that's a period cost. So it really matters where the cost occurs.